Okay. Well, this last month we covered a bunch of information about Nadex spreads. This month and next month, we're going to be mainly focusing on Nadex binaries. If you were with us last week, we covered the basics of binaries, kind of binaries 101. Tonight, I'm going to do just a very quick, brief overview of binary basics. And we're not going to spend too much time on it, just a quick run through. For those of you that might not be fully up to speed with binaries, I'll show you where you can get last week's webinar recording if you want to watch it in detail. And then what we're going to do is kind of just run through a couple different binary trading strategies that we use at Apex Investing over the next few weeks. This month and next month, we're going to be covering each one of these strategies in depth, in detail. What I'm going to kind of do tonight is just kind of give you a broad overview of them. I'm going to kind of run through 3 or 4 different strategies, show you how we do them, show you a chart, show you our indicators, show you some of the entry and exit rules that we do, and why we use certain strategies on certain days. Just kind of give you a blanket overview of the different types of strategies that you can use for binaries. I'll show you where you can go right away tonight afterwards and watch some educational videos on them to get a head start. Otherwise, make sure to keep joining us this month and next on Monday evenings as we go through all these. We'll be covering scalping, the 5-minute and 20-minute binaries. We'll be covering doing strangles and butterflies on the 20-minute binaries, directional trading on binaries. We'll be getting into all those in depth over the next few weeks, but a quick run through tonight. So let's just get started here real quick, run through our standard disclosures so we can get moving on with the webinar here. Give me just one moment. All right, there we go. So as always, disclosures. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Apex recommends you seek independent advice before making any decisions. The information contained in these webinars are the property of Apex Investing Institute and not to be shared or distributed to another party without express written permission. Again, futures, options, swaps involved risk, may not be suitable for every investor. And the contents of this webinar are not an offer or a solicitation of an offer to buy or sell any particular financial instrument offered by Nadex, and past performance is not indicative of future results. So what are we going to cover tonight? Like I said, a brief overview. Directional, reversal, scalping trades, range bound trades, how to determine the market conditions, what is scalping, directional trading, reversal, and then just an overview of the upcoming webinars. And one of the big things that we'll cover briefly tonight and over the next few weeks is how to determine market conditions. One of the reasons that's so important is, you know, some days the markets are trending. Some days the markets are totally flat. Some days the markets are volatile, but they're very choppy. They're up and down. There's a lot of movement going on, a lot of volatility going on, but not necessarily a clear trend. So, you know, some people ask, well, why do you have several different binary trading strategies? Well, because no one single strategy works 100% of the time. Nothing works 100% of the time. And different market conditions, different days require different type of strategies. All right, you might have heard this say this plenty of times before. You can't win a football game if the only play you ever do is a Hail Mary, right? You need more than one golf club in your golf bag. All right, there's a tool for each job, a job for each tool, and you use and utilize different tools, different strategies, different systems at different times based on those market conditions. And we're going to talk a little bit about that. So, for those of you that may possibly not already have an account with Nadex, go ahead and hop over to nadex.com. Just pull this up here for you. You can go to nadex.com. You go right here to trading. You go to demo trading platform, and you can open up a demo account It just takes a few seconds to pop in. All you got to do here is just fill out a username, first and last name, phone number, and email, apply for demo. What they'll do is automatically give you a demo account to trade with $25,000 of funny money in it to play with the platform, get to know the platform. You can test out some systems and strategies and get those mastered in demo before you go to trading live money. Okay, you can open a live account, minimum deposit of only $100. Again, just takes a few minutes to set that up and get going. So if you don't have an account, at least if you don't have a demo account, go right away, even right now while we're doing this, hop over and just fill this out. In just a few seconds you'll have a demo account. Okay. Also, big question we always get on these webinars: is this webinar being recorded? Yes, it is. We do record all of our webinars each week. And if you hop over to our website, apexinvesting.com, you can sign up for a free membership to become a free member. That'll give you access to our website, access to all of the education, and literally hundreds of hours of education, our forum. And right here, a couple of different places you can go. If you go right here to questions, the questions tab, trading questions forum, it's a great place to go to start learning. We have this broken down into several sections here. We've got them titled S1 through S12, sanity, Stewart, schedule, select, structure. Over here you've got system. You can go through here and get all kind of information about trading, trading psychology, trading mentality, risk management. Over here in the strategy and system section, you can watch plenty of videos and step-by-step training courses on all the different systems that we have, all the different ways that we trade binaries and other binaries and spreads as well. But if you go right here to General Trading Forum, you might have to hit show to expand this. Right here it says Apex webinars and newest webinars. Okay. This is where tonight's webinar will be posted. I'll try to have that on there later tonight, otherwise first thing in the morning. So if you want to go back and watch this webinar, it'll be right there. You can also see past webinars we've done. The title and date is there. I mentioned for you newbies that may not have a whole lot of experience with Nadex binaries, I will do a brief overview of the basics here in a moment. But you can go back and right here watch last week's webinar, Binaries 101, a little over an hour long, walk you through step by step exactly how binaries work. But what we do is when we do our webinars, the most recent webinars will be posted here. Then after a while they'll go into their own individual sections. If you go over here to the education tab of the site, let me just go right here under education. Here's another place you can go to get a lot of good information. Go right down here to Nadex tutorials. Alright, well, let me just zoom out a little more here. I really need to move that there, don't I, Cameron? You just go right here to Nadex tutorials, and you've got Nadex platform, Nadex spreads, Nadex binaries. Okay, and you can go through there, go through those sections. There's a bunch of different videos covering everything from basics of binaries, trading strategies, why Nadex binaries, how to use the price ladder, what's the difference between in the money, out of the money binaries. Tons of free education here. Alright, so all you got to do is go to apexinvesting.com, sign up for a free account, select a username and password, and you've got access to all of that information right there. Alright, then I'll review that again at the end here, just as a reminder to show you where the webinar will be posted later tonight or in the morning. Okay, so we're going to go through and cover these sections here. Feel free to ask any questions if you have them along the way. If I can stop during that section and answer it, I will. Otherwise, I'll try to get back to it at the end. Most of your questions may be answered as we go. But let's jump in here. Let's do just a quick, I know for you guys that are experts and pros with you know, the basics of a binary and how they work. You might this might be repetitive for you, but we just want to do a quick overview of binaries. What are they, how they work, how they can be traded. All right. Yes, Dave, you can sign up. We do have different memberships, but you can sign up as a free member to get full access to all of the videos and education there on the site. Okay. So what are binary options? They're short-term, fast-moving contracts with only two possible outcomes at expiration or settlement, which is 0 or 100. Basically, a binary is a 0 or 1, yes or no, true or false. Did the event happen or not happen? So at expiration, the contract's either worth 0 or worth 100. You can hold a contract all the way to expiration, or it can be exited before expiration. All right? And again, they can be traded in volatile markets or flat markets. Here's a quick example. If we buy a Nadex binary at $25, then our maximum risk is $25. All right, that's the most that we can lose is $25. On a long position, meaning when you're buying, all right, the amount you buy the binary for is your amount at risk. The risk amount is the money you're putting up in order to place the trade. Now, the difference between where you buy the binary at or what you buy the binary for and $100 is the maximum you can make. So in this quick example here, like I said, at expiration, a binary is either worth 0 or 100. So if I'm going to buy a binary for $25, the most I can make is $75. The most I can lose is $25. Let's look at another example. What if I buy a binary for $75? Well, the most it can be worth at expiration is $100. So the max risk is $75 that I put up to place the trade, the $75 I put up in order to buy that binary. My maximum reward, the most I can make, would be $25. So again, the difference between what I bought it for and $100. All right, that's on the long side if I'm buying a binary. Now, what about the opposite? What if I'm selling a binary? Well, it's a little bit different here. If we sell a Nadex binary at 75, that means our maximum risk is $25 because it's the difference from $100 to where I sold for. So the amount I sell a binary for is the maximum amount I can make. The difference between what I sold the binary for and $100 is the amount at risk. All right, the risk amount is the amount I put up to place the trade. So if I sold a Nadex binary for $75, it can go all the way down to 0. All right, which is actually what I would want it to do in this situation going short. So if I sell for 75, I have a max profit of 75, and my maximum risk is 25. All right, so it's the opposite of buying a contract. Another example, if I sold a binary at $50, again, at expiration, it can only be worth 0 or 100 at expiration. So if I'm selling for $50, my maximum risk is 50, my maximum reward is 50. Okay? So, if you're actually placing a trade on the Nadex platform and you select a particular binary and you pull up and you click that binary, an order ticket will pop up. And it'll actually tell you right there on the order ticket your max profit and max loss. So on this particular example here, the right hand side is the buy side, the left hand is the sell side. Okay? So if I selected to buy this binary for $85, see, we selected buy, size 1 contract for $85. It'll automatically fill this in and tell me right away my max profit is 15, my max loss is 85. So if you ever get confused on, okay, now wait a minute, if I'm buying my risk is this, if I'm selling my risk is this, wait a minute. Before you ever get into a contract, it will tell you right there. All right, before you ever place that order right here, it'll tell you exactly your profit and loss potentials. All right. So what is a binary contract? Right here, this is an example of the euro dollar. All right. And what this is saying is that we're saying that the euro dollar will be greater than 1.3960 at 3 p.m. So if I think that the euro dollar will be greater than 1.3960 at 3 o'clock, then I would probably want to buy this contract because I'm saying yes, that will be true. That will be the case. That will happen. All right, that event will happen. So I'm saying yes. So if I were buying that contract, okay, my max, so if I'm buying at 85 and it does close above at 3 p.m., the binary would be worth $100. So my maximum reward will be $15. Now, if it doesn't happen and I was wrong, the statement was false, goes the other way, then the binary will close at 0 and the maximum loss is $85. Now, keep in mind, we don't have to hold if it's going against us and going the opposite way. I don't have to hold it all the way to the end, till expiration, and let it expire at 0. I can get out earlier, okay, to potentially have a smaller risk amount. Okay, so a couple different things here: risk and reward. So keep in mind they're opposite. All right, if I'm buying for 85, just like shown here, all right, my risk is 85, my reward is 15. If I was to sell this contract, I'd sell it for 79. So my max reward would be 79. If I'm selling this, I'm saying no, I don't think the euro dollar will be above 1.3960. I think it'll be that or below that. So I'm selling for $79. My max reward is 79. My max risk would then be 21. Okay, so just like we covered there, if I was going to sell a particular contract and on the order ticket I selected sell, it would fill it all in and tell me right there. Right now, if I were to sell this for 82, my max profit would be 82. Max I could lose would be 18. Okay, so that's an example there of a buy and a sell. Again, keep that in mind. When you're buying, your risk is the amount you put up to buy. When you're selling, your risk is the difference between where you sold and $100. So what can binary contracts be traded on? Nadex offers binary contracts on stock index futures, spot Forex, commodity futures, and economic events. Each type of binary has different expirations. On 4 particular FX pairs, they are offering 5-minute binaries that run pretty much around the clock, 23 hours a day. On the 4 US indices, they offer 20-minute binaries that run from 10 a.m. to 4 p.m. Eastern Time, as well as intraday contracts, which have hourly expirations. Daily contracts expire at the end of the day, and weekly that expire at the end of the current trading week. All right, no binaries on Nadex last past Friday. None of them go over into the weekend or into the next week. Okay, so good for all markets, whether you're going long or short, you're doing a straddle, you're doing scalping, you're doing premium collection, if you're tiering in. Binary options can be used in all type of different markets. There's a bunch of different strategies that you can use with binaries. We're going to cover a few of those. But again, that was just a very quick walkthrough of binaries there. I know I kind of rushed through that, but if you want to go back and watch a full step-by-step detailed webinar about the basics of a binary, getting into a few more examples, exactly how they work, exactly what all the basics of them are, you can watch last week's webinar there where I showed you. Binary strategies. Bunch of different strategies, bunch of different systems out there. Vanilla options, news trades, vertical spreads, butterflies, straddles, iron condors on spreads. You can do hedging. There's a bunch of different types of strategies out there. You can totally fry your brain on all the different potential strategies out there. All right. But what we want to cover tonight is just kind of an overview of what we're going to be covering the next few weeks here. All right. We have a 2-month series of Nadex Binaries. Next week we're going to cover short-term expiration binary strategies. What I mean by short-term expiration is the 5 and 20-minute binaries. All right, then we're going to cover binary strangles and butterflies that we do on the 20-minute binaries, directional trading on 5 and 20-minute binaries, scalping with 5-minute binaries, and then part-time and nighttime trading with the 5 minutes. Okay, and again, if you want to get a head start on those, like I said, you can visit the Apex website. You can go through all these videos here. You can go to this tab right here. It says Binary Essentials, and you can go to let me just pull this up right here, Trading System Courses, and you can see it right there. 5-minute binary trend catcher course, strangles, butterflies. You can see all the different, you can watch detailed videos of everything we're going to be covering if you want to get a head start on and start learning some of these systems right away. Okay, so that was just a brief overview of what we're going to teach you. What are some of the different main strategies and systems that we focus on? Well, one of the first ones that as I was talking about earlier, you've got different market conditions on different days. So why would we have those different strategies? Well, like we said, to be able to trade efficiently those days. Range bound. What does range bound mean? Well, some days the market does not trend, and again, you need multiple plays in your book. You need to be able to adapt to the market conditions. There's no single strategy or system that works 100% of the time. All right. For a range bound strategy, what you're looking for there is flat markets, not trending markets, not markets that are trending up and down, not necessarily choppy markets that are volatile, just going up, down, but more a flat market, non-trending, and you're also going to be looking for a strategy that does not require movements. All right. On a trending day when the market's just taking off and flying, well, you'll want a trending strategy. You'll want, you might want to look at, even using Nadex spreads at that point where you can take advantage of that trend, take advantage of the big moves in the market. But on a range bound strategy, you're not looking for any moves. The market's flat. All right. And some people say, well, I can't trade today. How am I supposed to make money in flat markets? It's not moving. I need it to move. Well, not necessarily. But for range bound strategies, you would want to stick with in the money binaries, not at the money or out of the money binaries. Because an out of the money binary or at the money binary is going to require movement. All right. Let's talk about that. What is a butterfly? Butterflies are a strategy we use for range-bound markets. What a butterfly is where you're selling an upper in the money binary and you're buying a lower in the money binary. You're actually entering into two contracts potentially at the same time, and you're looking for the market to expire somewhere in the middle between the two. That way you can profit on both sides. Let me give you an example of a chart. Don't be overwhelmed by this chart. You may not know what you're looking at here. We have a bunch of different indicators on here. Let me just give you a quick idea of what this is. All right. What I'm referring to in this particular section is utilizing the Nadex 20-minute binaries on the US indices. Here's an example of an ES chart right here, okay, on the S&P. See these boxes? See these square boxes? All right, right here we're using a 5-minute chart these square boxes are set to every 20 minutes. Okay, you can kind of see with the timestamp here. It's every 20 minutes. All right, this is what we call our expected range indicator. All right, this does two things for us. For one, this lets us easily see the expiration times. All right, we know that at the end of each one of these boxes, there's going to be an expiration of a 20-minute binary. So it makes it very easy for us to see that expiration time. Also, again, as I called it, the expected range. What this is an indicator that shows us historically what is the expected range of the market for this particular day of the week, hour of the day, minute of the day. Okay? And it's basically showing us that the market is expected to stay within these range boxes. And as you can see, they normally do. All right? There's times where they will go out of it and the market's volatile and market's moving. We'll talk about that. All right? But that's how we use our expected range. That's our expected range indicator. So, one other quick indicator here, and again, this is a very brief overview, guys. This is not a detailed education on each indicator and chart. This is just me walking through some of the different strategies, showing you what's coming up in the next few weeks. Each week we'll dig into one of these strategies at a time in depth. But you see this other indicator right here, expected volume. Might not be very clear, but you kind of see this yellow line, and then you see this blue fill. We'll see right here where the blue passed the line. What that means is right here there was higher than expected volume. All right, but when the blue stays under the yellow line, it's not exceeding the expectation. All right, it's not exceeding expected volume. So you can see here overall the market's just kind of flat here. It's not really moving a whole lot. So let's go back to our binary basics for a minute. Let's take a look, for example, at this box. All right, see the top line of the box here? If I sold a binary somewhere in here, what am I saying? I'm saying that the market, when this contract expires at, in this case, 3 o'clock, at 3 o'clock, I don't think the market will hit this level. I'm saying that it's false. It will not hit or break that level. I'm saying it's going to stay below this level. So I'm going to sell a binary right there. That makes sense? Everybody follow me? If I think the market will stay below this area, then I'm going to sell it. Correct? Okay. Now, what's the opposite side of that? Look at the bottom range of the box. Well, if I say I think the market will stay or be above this area at 3 o'clock, then what would I want to do? I would want to buy a binary there, because I'm saying that statement will be true. The market will be above this area, this range, this level by 3 o'clock. Does everybody follow me there on those the two differences? Remember what we covered with the binary basics? Okay, great. So if I'm saying market will not be above this and it will be above this, then what I can do is I can sell a binary up here and I can buy a binary down here at the same exact time. So what has to happen for me to profit? Well, I can profit on both contracts, potentially. I could profit on the sold contract and on the bought contract, as long as the market at 3 o'clock expires somewhere between the two of them. Does that make sense? Some of you, especially those that might be newer to trading, might have only looked at, directional trading, or only considered one direction of a binary contract, as opposed to realizing that you could have two. So again, what is the point of this particular strategy? Let's say the markets are going crazy. They're bouncing up and down. Do I want to buy and sell? Probably not, because the market could shoot one way or the other way and go through one of those contracts. I'm wanting to do this strategy when the market's just flat. I'm trying to figure out, how do I still make money when the market's not moving, when nothing's going on, when nothing's happening? And the way to do that is to what you call collect premium, which is I'm taking an in the money binary. What I mean by in the money is if I bought a binary right in here, I'm saying yes, the market will be above this level by 3 o'clock. But the market's already above that level, isn't it? Yes. So that's called an in the money binary. It's already in the money. It's already a true statement. Okay. Let me just check some questions here. Okay. Yes, Cleaver, I believe that question I'll actually answer here in just a second. Okay, so that's what we call a butterfly strategy. All right, well, we're going on both sides of the market. We're buying and selling, hoping to collect profit on both sides with the market just staying in the middle. All right, and it not moving. So what's an example of that? Well, on that particular example right here, see this chart was on the ES. I was actually looking at the 4 p.m. expiration, not the 3. But what we did is we entered a contract here. We bought for $82.50 and we sold for $19.50. So what happens here is if the market expires in the middle, on the bought side, I have a potential profit of $17.50. And on the sold side, a potential profit of $19.50. So between the two, you've got 17, 19, about a $37, $38 profit there. You can see on the P&L here, as it was getting closer to expiration, we started gaining some of the profits on there on both sides. All right, so a little bit different, a little bit something different to consider. Sometimes you don't think about going in on the same time frame and buying and selling at the same time. Ryan, no problem that you came in a little late. I'll show you here at the end where you can get a recording of this webinar. That way you can get fully caught up. Okay. So that was an example of a strategy we use for flat range-bound days. Okay, that was for what we call a butterfly strategy, how to take advantage of the market when it's just flat. Now, what about choppy days? Okay, where there is actually volume. It's not flat, there's volume, the market's volatile, there's movement, the market is going up and down, a lot of movement, a lot of volatility, but the trend's not real clear. Like, it's not just a huge, hey, the market shot straight up 300 points today. Okay, well, in that situation, what we do is what's called a strangle. Now, strangle's a little bit different. It's kind of the complete opposite of what a butterfly is. All right, on a strangle, we're actually using low risk out of the money binaries. Remember a second ago on the butterfly option that I showed you, we were getting in the money binaries. Remember, we bought one for 85. So our risk was 85 bucks. We also sold one for 19, so that risk was 81 bucks. Okay, those were already in the money. They were already true statements. Strangle is the exact opposite, and I'll give you some examples. It's a low risk trade. There's no stops needed. You're going for a 1-to-1 risk reward ratio at a minimum. This is where there is an expected move in the market. You're not the market's not flat. You're not looking to collect premium. You're expecting the market to move. You're just not quite sure what direction it's going in. Okay, but you do have to make sure with this strategy that there is movement in the market, or else time will just decay away on your out of the money binaries. Okay, and what you're doing, the other big difference here between what we just covered, the butterfly strategy we covered you're hoping to profit on both sides, a little bit on both sides, right? Everybody follow me there? The strategy we just covered, you're selling above, buying below, want it to expire in the middle so you can profit on both sides. With this strangle strategy, you're actually expecting to lose on one side and profit on the other. Now, you could potentially profit on both, but that's very rare. You're normally looking to only profit on one side. These are quick trades, they're low risk, they're great for part-time traders. On the 20-minute binaries, there's even narrower strikes at lunchtime, which creates a lot of opportunities. Let me show you what I mean by that. This is a little bit different chart that we use. Okay. Let's see here. All right, this is a little bit different chart that we use here. But same thing, we've got the ranges on here. Now, do you see the difference on the two charts here? You see how this one actually is not just kind of flat. This one actually has some movement. But again, it's not a super clear trend. It's up, down, up, down, up, down, right? And look here at the expected volume. Okay, see how the blue bars are breaking the yellow bars like all the time here throughout this day. So on the butterfly example, showed you where it was a flat market and hardly no breaking of volume. Here you see this bouncing up and down between these ranges. Here it even flew out of that range, but you're seeing this volume breaking. All right, so that's showing you a lot of volatility there. So I know there's movement in the market, but it's not a real clear long-term trend. What could I possibly do? Well, it's kind of the opposite of what we did. What if I bought a binary up here real cheap, 15, 20 bucks? All right, and what if I sold something down here real cheap? Okay, it's kind of the opposite of what we just did. Well, what does that mean? Here's a screenshot of the binary scanner. That is a tool that we offer over at Apex Investing. It's a free tool. It basically, if you've ever traded the Nadex platform, let me pull this over here. Give me a second to pull this up. I'll show you why we use this real quick here and some of the benefits of it. Give me just 1 second. Woody, I'll show you at the end here where you can go and get access to some of these charts. Okay. All right. So on the Nadex platform, let's say you were trading the Nadex platform. For example, right now, 5-minute binaries are going on. The 20-minute binaries are not open right now because they're only on the U.S. indices during the day. But let's say I was trading the 5-minute binaries. I can do 5-minute binaries on Aussie dollar, euro dollar, pound dollar, and dollar yen. So if I want to trade the euro dollar, I have to click euro dollar and wait for it to come up, and then I can see all the options that are available for euro dollar. Okay, maybe there's one I like, maybe I don't. Okay, now I want to look at the dollar yen. I'm having to click and click and click and go back and forth between all these different instruments, right? Well, the beauty of the Apex scanner we have, and I'll show you some more examples of it, is it pulls everything up for you. Okay, and I'll show you some examples here in a little bit how it will pull all the different contracts up in one place, exactly what you're looking for. But on the scanner, let's just say that this is an old example from a PowerPoint, 12:40 p.m. This is the expiration time on a 20-minute binary. Well, the market's right in here. All right, you can always tell where the market is when a binary is priced right around 50 bucks. That is what we call at the money. So that's about where the market is. So the market's right here for now. But I know it's volatile. It's going up, it's going down. So what if I bought this contract right here for 18 bucks? And so that'd be $18 risk. And what if I sold this contract? That's a $14 risk, right? Okay, so I've got $18 risk up here, $14 risk up here, and what I'm expecting to happen is the market's right here for now, but it's going to jump. All right, well, what if the market jumped up here and got close to this strike here, this level of where I bought? Well, now an $18 binary would be worth what? Well, if that's where the market is, it's worth approximately about 50 bucks. Okay? Or if the market was here and it dropped down to this level, well, then that would now be the at the money binary, and it would be worth the 44, approximately 50 bucks. All right? You kind of follow me there? Let me show you some more examples here. Here's a few examples of some trades. So on this day, for the 120 expiration, all right, it's a volatile day, bouncing between our ranges, and we're getting some volume here. Okay, so we go in right here. I sold the 42.77. Okay, and which would be right in this area right here, and I bought the 42.87 right up in here. So this is a 20-minute. This box is a 20-minute time period. So at the beginning here, when it opened up, I bought one up here and I sold one down here. So what happened? Well, at the time of this screenshot, we were right up here towards the top. So I sold this one for 86, and you can see here it's worthless. It wasn't worth anything at this point because the market didn't go down. Remember, when I'm selling, I'm saying the market's going down. Well, at this point, the market had gone up. So I had a $14 risk on this trade, right? I lost $14 there because the market went up. On this long trade, I put up $15 risk. And now look. Now that $15 contract is worth $70, and I could have got out of it right there. So what did I do here? I risked 15 and 14. I risked 30 bucks and one side. Remember, I said you're always expecting to lose on one side most of the time and to profit on the other. So I put up a total of $30 risk, and at this point I could have closed out for $54 profit. Because I'd have lost the 14 here, but I would have got this 15 back plus the 54 because I bought up here and the market went up there. Okay, and that you can see that's the 120 expiration there. It's another example on TF on the Russell. Same thing, kind of bouncing here, got some volume. Market here, boom, went way down. Actually came outside the range. Sold one for 83. Bought one for 25. Well, the market went down, so this $25 one's worthless. But this one I sold for 83, got a $17 risk, and at this point, because it was going down, 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 boom, as you see on your P&L, it was up $64. Another example here, the next range, 220 expiration, you can see it again, bouncing, volume, hopping in here. Bought one at 20, sold one at 79. That one's up 52.50. Okay. See here, Frank asks, what if the market closes between the two options? You lose both sides, right? Yes, that is correct. Let's say that I bought in here. So I got in here and I bought and I sold. And, well, that's not necessarily true, Frank. Because let's say that I got in here. Frank's question is, if the market closes between two options, you lose both sides, right? Well, with this strategy, you are not wanting to hold until expiration, okay? Because yes, Frank, you're right. If you held to expiration, and at expiration the market closed between them, then yes, you lose on both sides. You're not looking to hold to expiration with this strategy, okay? For example, let me go back up here to all these other screenshots. Remember how I talked about if I bought in right here at 18 Okay, remember right here at 50 bucks, that's what we call an at the money binary. What that means is that's where the market is right now. Okay? Because the market is, if the indicative's quoting at the strike price of the binary, it's normally worth 50 bucks because it's a 50-50 chance at that point. Is it going to expire above or expire below, right? So that's right where the market is. So if the market's right here at 17,893, I can get this for 50 bucks. But I'm buying this one at 18. So if the market goes up and hits this level, then all of a sudden what's this one going to be worth? Well, about 50 bucks, right? So what I'm looking to do is I'm wanting the market to move either up towards the one I bought or down towards the one I sold, and I'm wanting to do a 1-to-1 risk reward ratio. So what does that mean? Well, let's look at this first example. I sold one with a $14 risk right here, correct? I sold it for 86, so my risk is 14. I bought one for 15. Okay, so if I bought this for 15 and then all of a sudden now it's worth 30 and I got out, well, I didn't make anything, right? Because I got my 15 back here and I got my 14 back here, so I'm break even. But if I want to go for a 1-to-1 risk reward ratio, I want to be able to get out of this thing with a $30 profit, right? Because I've got about a $30 risk. So I want to be able to get that risk back plus 30. So let's look at this example. I took a screenshot of it here where you can see it was up 54 bucks, meaning I bought it at 15.50, it's now worth 70 and I'm getting out. Does that make sense, Frank? I'm not holding it till the end at 100 bucks. I'm just holding it till I get my risk reward ratio and I get out. And why is that? Well, let's look right here, for example. All right, let's say we got in right here. Market went up. Boom, 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 up, right? And that's why this contract that I bought was up so high in value. See that? So I would want to get out. Boom. Why? Because look what happened. By expiration, it came back down and I would have lost. Okay, does that make sense? So that's why you'd want to get out. Yes, Marlon, I can show that. Hold on just one second. Same thing here. Well, here you would have been okay. It actually kept going and it would have expired down there and you would have been great. But you don't always know that. You want to take your profits and run. Okay. Let's see here. We got that example there. Does that make... Okay, you good with that, Frank? Everybody understand why we don't hold those to expiration? So just give you an idea here. You can see these time frames here. 1:20 p.m., 1:40 p.m. I missed the 2 o'clocks, did the 2:20. You see the example there. I sold for 79, bought for $20.50. When the market moved up, it was up there, would have gotten out. Another one at 2:20 on the Russell, bought for 74, or sold for 74, bought for 26. As you can see, the one I bought is worthless because the market went where? Down. Market was trending, kind of chopping back and forth, had higher expected volume. It went down. That's why this one here was in the money and profitable, because of how far it went down. You can see here at 2:40, the very next expiration, we've got examples of getting on all 4 of the indices. Right here, $10.50 risk on one side, $10.50 on the other side. Boom, that one went almost all the way to expiration, $82 profit. Same thing here, $9 risk, 83. So that gives you an idea of what a strangle is. Okay. Let me just look at a couple questions here, guys. Give me a second to catch up on a few questions, then we'll cover one final little strategy here. Let's see. Yes, Jack, you can do that as well, and that's probably something we'll cover a little more in depth in 2 weeks here when we cover in depth the strangles. Woody, I'll show you how to get those charts. Let's see here. Yes, Dave, this is binaries, not spreads. Right. These examples here are using the 20-minute binaries on the U.S. indices during the daytime. Yes, binaries, not spreads. Would strangles be a good strategy before earnings announcements? John, sometimes we do use strangles. That's a very good question. What John's basically asking here, let me go back to the chart. Sometimes before news announcements, you have no idea what the news announcement is going to be. You know, is it a payroll report, unemployment jobs report? Is it earnings? Is it something that's going to affect FX pairs? You know, the news media and everybody might tell you, oh, it's expected to be this, it's going to be this. Most of the time they're wrong. It's the opposite. You don't know. You don't know most of the time if that report's going to come out good or bad, up or down, positive or negative. So where's the market going to go? Is the market going to go up? Market going to go down? You don't know. And that's exactly what this type of strategy is for, where, hey, I'm expecting a move. I just don't know which way it's going to move. So yes, strangles can be a very good strategy before news releases. But actually, if you go to if you go to the website, go to the Apex Investing website, you might be familiar with this, John. Sorry, guys, I've got a million things open here. This is taking a second to load. Right here, see this tab, News, and you go to News Trading Plan. Okay, and each week this lists off all the major news. All right, it's not every single news report out there, but it's the major news that we feel our traders need to be aware of, or it's the news that, you know, is going to be higher impact news, actually have an impact and move the market. And a lot of times, though, where you got to be careful with strangles is you don't want to just go in and start buying strangles on every little news announcement out there, because for you to profit with a strangle on one of those sides, the market has to move. It has to make some movement. Some of these news events are very low impact. They don't move the market enough, and you'll end up just having time decay on both sides of the trade, on both of your contracts, all right, and losing both sides. It's got to be, to do a strangle, it's got to be a trade that, or a news event that's going to have enough movement of the market to profit. Because again, you got to be able to profit on the one side plus make up the loss on the other side. You know what I mean? I'm getting my little Chrome issue here. But that news trading calendar there will actually go through and show you the news events, and it will show you which news events. It's a trading plan. We tell you how to trade that news event, and we will tell you which events are good events for trading strangles, and which ones are not. Okay? If it's going to have a big move to it, we trade strangles. If it's not going to have a huge move, we do iron condors with Nadex spreads. Okay, and you'll see that on here. See that? Iron condor, pound trade balance, iron condor, Aussie unemployment. You can click on one of these and it'll tell you, you know, the Aussie unemployment change coming out tonight. Look for iron condors. Looking to get an iron condor, entering it this time with an expiration of this time for a minimum we have it all laid out for you. And when we do iron condor, an iron condor is kind of like a butterfly, but with Nadex spreads, to where we're expecting it to move a little but not a lot. So we're going to collect premium on it. Okay. On that same news plan page I just showed you, you can go down and there's 3 different videos explaining iron condors. But yes, that's a great question. We do use strangles on some news events. We also use strangles on like Google earnings day, You know that when Google earnings comes out, it moves the market big time, right? That's a perfect time. That's when we, predominantly when we use strangles on news events or those type of situations with earnings. Okay. Let's see here. Is your closing order always filled right away, or is there some slippage? And then, okay, we got two different questions here on closing orders. Give me just a second. We can go over that. No problem. Jonathan, your other question, is it possible to make money both ways? Absolutely it is. It won't always happen, but it can. And that is why you, earlier when I started talking about strangles, I mentioned that, you know, there's no stops, meaning we don't close the other side. Why is that? Let's look at an example here. Okay, see this example right here? So here's a 20-minute period. See that 20-minute box, right? So let's say at the opening of this 20-minute period, I bought one up here and I sold one down here. Well, what happened? Boom, market takes off, goes up, 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 up. See, like right here, okay? Or again, same thing happened there. So this one that I sold was worthless. See, P&L 0. The one I bought for $15 is now worth 70. So I could have got out with a 1-to-1 risk-reward ratio, right? Boom, I got out. I'm happy. Oh, but wait, what happens? Now the market flies back down. What would have happened there? All of a sudden, this one here might now be worth something. So yes, you can potentially profit on both sides if the market goes up and then comes back down in your time period. And it does do that. Or sometimes it just flies on down. So yes, when you go into this strategy, you go into it with a mindset and with a risk-reward ratio goal of losing on one side. You know, all right? That's you're going into it expecting to lose on one side, but to make it up on the other side and get out. But this side is still open. So yes, it could come back for you and profit on both sides. Seen it happen plenty of times. Doesn't happen all the time, but it can happen. Okay. Let's see here. These particular charts that I'm using right here are particular charts used by Apex called diagnostic bars. Okay, and these are 6-tick diagnostic bars. Okay. Yes, Caleb, absolutely, I do. Let's see here. Can you use these strategy with the 5-minute? Vita, yes, we can use. Well, Vita's question is, can you use these strategies with the 5-minute Forex binaries? You can. We honestly don't, because you don't normally. I'm going to show you next what we do on 5-minute binaries. Can you do these on 5-minute binaries? You could. You don't all. The 5-minute binaries move so fast. You don't always have this. You know, the strikes you might want. For example, remember I showed you right here the screenshot of the binary scanner, and just on this particular contract here, you know, we've got 9 different strikes. Okay, well, you know, we don't have as many of those strikes on the 5-minute binaries. You might not quite get the pricing that you want. You can. I see them at times. You can. So I'm not saying you can't. You can. You won't always get the right pricing that you want on the 5-minute binaries because of how they move. You can get them, but not as often as on the 20-minute. Okay. Martin, you said earlier that the spread intervals are tighter around lunchtime. Well, what I'm talking about there is the actual strikes. Okay, like see right here, 17,900 to 17,907. So the strikes are 7 ticks apart. Okay, at around lunchtime, those get closer. All right, for example, and they're listed right on the Nadex site. Let me see if I can pull it up here for you real quick. And why is that? It's because everyone is at lunch. All the markets slow down normally around lunchtime. All the big guys are either at lunch or they've made all their money for the day and they've gone home. So the markets don't normally move as much during lunchtime. So that's actually a good thing for you as a trader, because with those tighter tighter strikes, you've got a much easier chance in a slower market for those to be hit. All right, does that make sense? When they're not as far apart. Let me see. I'm just trying to pull it up here for you. Let's see. Strike one. Yeah, here example. If you go to the Nadex website, let me just pull this over here. There we go. For example, on ES, 20-minute contracts are one tick. The strikes are one tick apart, but from 11:40 to 2:20, they're only 0.7 apart. Okay, or for example, on the Russell, they're one tick apart, but during lunchtime they're 0.7. So just since the market doesn't move as much, the strikes get closer. Okay, which means the market does not have to move as far to get to your strike and to potentially get some profit. Okay, does that make sense, Martin? Yeah, Dave, these 20 minutes are nice. You know, the 5 minutes, I love the 5 minutes as well. Yes, everything, Dave, everything is Eastern time. Everything we talk about, all the strikes, expirations, everything we're showing here is Eastern time. Okay, Martin, perfect. Okay, getting a couple questions here about, and then we're going to finish up real quick. A couple questions about entering and exiting orders. Let me see what those were here. Let's see here. I think Vita, I think you had Vita. I'm not sure if I'm saying your name right. Vita. How do you enter and exit? How do you exit early? Okay. Let's just look at, for example, anything. Let's look at, let's go to Forex right now. Let's go to Aussie dollar. The 7 to 9 p.m. expirations. Okay. Right now it's 8:06 Eastern time. Here's the strikes I see. This is the Nadex demo account. Okay. So let's say that I want to, I'm going to take this contract right, well, let's just take this contract right here. And let's say that I want to buy this contract, 33, is it 33.50 right now, right? So 33, see it moving? All right, so let's say I want to buy that contract. All right, so I bought that contract, right? Now, it doesn't expire till 9 o'clock. So I've got almost an hour to hold on to this contract, right? Well, I can get out of this contract at any time as long as there is a quote on the opposite side. All right, Vita, I think that was part of your question as well, was how do I get out when I get a message saying there's nothing on the bid? Well, all right, so this strike of 76.86, it's right here, 76.86. So I bought it. I'm on the buy side here. For me to get out of it before expiration, there has to be a quote over here. Somebody has to take the other side of this trade. All right. If there's no quotes over here, and when I say quotes, I mean you see right here there's 100 of them quoted there. You know, you've got market makers, you've got other traders, and normally you're going to have a quote there unless the market has just moved way past it, or you're in the last 2 minutes before expiration, is what we call dark zone. That's when the market makers stop quoting. Okay. But if there was no quotes over here, there's no one else to take the other side of my trade, then yes, then I'd have to hold it to expiration or until, you know, a quote pops up. But as long as there's a quote here, I can get out of this trade. So let's look at this. I bought this Aussie dollar contract. I bought it, see average price, that's what I bought it for. I bought it for $35.25. Let's say that I now decide, you know what, I went out of it because it's going against me. Or I say I went out of it because I've got some profit. Well, all I got to do is click it and it opens up the contract. All right. And notice it automatically filled this out as a sell. Why is that? Well, it's because I bought this contract. I'm already in this contract as a buy. See position +1. That means I bought it. I'm long. All right. I bought it. So if I am wanting to get out of this contract, when I click it, it knows automatically that I'm trying to sell to get out of it, right? So let's say that I'm like, okay, I see this bouncing around. I just want to get out of it. All right, well, I open the ticket, and right now I can sell it for 34 bucks. All right, so I click it, and well, now it's bouncing around on me, and I just sell it and get out of it. All right, does that make sense? There's a couple questions on that. Not for any of you that may have traded in the past, traded overseas binaries, kind of bucket shop binaries. Once you're in, you're in. You can't get out. You have to wait till the end. It's all or nothing. Okay, it's not that way with Nadex. I can hop in a trade, and I can buy this thing for $41.50. Or let's see here. Buy that thing for $39.50. Buy it, and well, it moved on me there. Sorry about that, guys. I can buy it, boom, got my order, right? And I can go right back in and just sell out of it for whatever is quoted. I'm out, I'm done. Okay, so yes, that's how you can get in and out of a trade very quickly. That's how you can get out of a trade before expiration. That's how you get out of a trade once you've met your risk reward profit level and goals. Okay, so let's see here. Yeah, exactly, Dave. Dave says I bought an hourly on the DAX on demo. I was in profit, but it expired at 0. Okay, something you'll hear over the next few weeks as we go through all of our different strategies and system is we never ever encourage to hold till expiration. Always get out when you're in profit, when you reach your profit goal, when you've got your risk reward ratio, you're 1-to-1 there. Because what can happen is, especially in those last 2 minutes when there's no quotes and it's going against you, you might not be able to get out of it. So okay, so we've talked about range bound and butterflies, buying and selling in the monies. We've talked about strangles here, where we're buying and selling out of the monies, expecting to lose on one side, make it on the other side. Very low risk. Again, on this trade here, small caps, sold one, bought one, sold it for 91 bucks. So that's only a $9 risk. Bought for 950 is 950. It's very low risk for potentially high profit, but you've got to have movement in the market. Okay, and guys, practice these. Don't just blindly. You know the quickest way you can lose money in your account and watch your account balance dwindle is because you see low risk, high potential profit trades, and you're buying binaries left and right for $5 and $8 and $10 because it's low risk, but you have no reason to buy them. You have no strategy or system or indicator behind it giving you the expectation that the market's going to move. You're just throwing your money away. All right, don't blindly take them. Have a reason for it. Don't take them just based on price or risk, and demo trade them first. Okay. Scalping. Let's talk about scalping real quick, and then we'll shut it down for tonight. We've talked about range bound. We've talked about straddles and breakouts. Scalping is exactly that. Just a quick in and out trade. It's not a long-term trend trade. It can work with very small moves. You don't always need a large move. Some people love scalping, some people hate scalping. It's a personal preference style of trading, but it can be great for part-time and nighttime traders, especially with the 5-minute binaries. Again, 5-minute binaries are 23 hours a day. You trade them during the day, you trade them at night, and you've got a new potential possible trade every 5 minutes. Okay. You can do them on 5-minute or the 20-minute binaries. What we're looking for there is a quick $20 to $30 profit, and we're in and out. Again, we're not holding on to it long term. We're not holding to expiration. And you just, here's one of the beauties about the 5-minute binaries is you only need a couple of ticks, if that. It doesn't require a big move to get a quick $20 or $30 scalp. Okay, and we do that with our trend catcher system. Here's a quick example. Again, this is from earlier tonight. A quick example, a screenshot of the scanner. All right, let's just look. Well, here, for example, this is the USD JPY, the dollar yen. All right, see these strikes: 121.26, 121.23. They're 3 ticks wide. Well, what happens here? Look at this one at 0.26 on the buy side. What is it? $20.50. Well, look at the difference of just 3 ticks. Look at the bid and ask. Instead of $8 and $20, $57 and $73. You see that? What's the difference here on 3 ticks? Euro dollar. Got 850 and 847. 3 ticks, $10, 92, 10, 70. I guess my point here is 3 ticks, 1 strike is a huge amount. So we only need a small move to potentially give us $20 to $30 in profit. Okay. Yeah, Woody, I'll cover that. I can review that here. Let me jump through this section here, and then we can talk about that. So for scalping on the 5-minute binaries, as an example, we're going to have a whole webinar about this. We have a whole step-by-step training course about this. It's a complete system that we teach, and it's with using our trend catcher system with the apex diagnostic bars on a 3-tick bar. Again, these squares are range boxes. On this particular chart, I have them set to every 5 minutes. All right. So what is this? Our trend catcher system, super easy. When you get an up arrow and green, what does that probably mean? Buy. When you have a red arrow down, what does that probably mean? Sell. Okay. So let's just look at an example here. This was from earlier today, or actually I think this was Friday because I made this earlier. Right here, market's going up, up, up. We're still getting exceeded volume, so we're expecting the market to keep going up. We're going to buy a 5-minute binary. And what does the market do? Goes up, what? From, bought it right here, from 1290 up to 12, I'm sorry, from 120.90, it went up 15, 18 points. Again, all we needed was two. We just needed 2. We just did a couple of ticks to get us the 20, 30 bucks and get out. So what happens if we came in here and we bought, we got our up signal, we got our up volume, we got our up direction. Well, we bought a Nadex binary for 30 bucks right here. Well, boom, boom, couple ticks later, we're up 30 bucks, get out. Right? Going up here into this new section, boom, we're going down. Say we sold here for 70, so we got a $30 risk. Okay, couple ticks, get out. We're up 30 bucks, right? Here, we're going up, going down, going up, going down. Very simple. Again, we have a whole step-by-step training course on this, but it's that simple. Because again, remember what we talked about here? And we can just pull it right back up actually on where do we go here? On Nadex. You can see it live right now. Somebody asked, is demo the same as like? Yes, it is. It works the same as far as how the market moves and how the prices move. So let's go to 5-minute binaries on dollar yen. All right, we're just coming into the new 5 minutes are about to start here, and let's take a look here. Yeah, Ron, I can show you that here in just a second. Still got that trade out there. Let's get out of that. All right, so let's look here. These are 5-minute binaries on the dollar yen. See 121.58, 121.55. Again, they're 3 ticks apart. All right. See over here the indicative. Right now the market's at 121.49. All right. See these prices here. You got 17, 59, and 92. Each one of those difference, and right here, 15, 49, 87. There's only 3 ticks difference between each of those prices. Do you see that? So what if, for example, you could buy this one right here for $17 and it went up 3 ticks? What could you get out of it for? 52 approximately, right? So that easily 25, 30, 35 bucks scalp there off of just 3 ticks of movement. All right, remember where we were here? Just look at this chart. All right, you get into one of these, I mean, take your pick. This one, I mean, even this little trade here is down. All right, within this 5-minute period, boom, boom, boom. There's 3, you're out. Up, you're out. Boom. That one would have gone against you. But boom, get in this one long, 2, 3 ticks, you're up 30 bucks. Here down, 2, 3 ticks, up 30 bucks. Up. You follow me? That's scalping. Okay? Yeah, on some of these, well, man, I could have held it and held it all the way to expiration. I might have made a lot. Yeah, you might, but you might not. But when you're going in and you can risk a small amount and you just pop out of it, I mean, what are we talking about here, guys? 5 minutes, 10, 15, 20, 25, 30, 35, 40. That's 40 minutes right here. Okay? You got 1 trade, boom. 2 trades, 3 trades, 4, 5, 6. You got 6 or 7 trades right there just in 40 minutes. Yes, you would have lost on this one here. All right, so you're down 30 bucks there, say. But what about all these other ones? Okay? So that's scalping. That's how we trade the 5-minute binaries. We also trade the 20-minute binaries with the same exact system. Again, it's $20 to $30 profit, in and out, low risk. There's no stops needed. It's just a quick $20 potential scalp all day and all night when the market's moving. Okay, it's, again, great for part-timers, night-timers, newbies, and especially people with smaller accounts, you know, that don't want to go in and be risking hundreds and hundreds of dollars on trades. Just want to go in and risk $20 or $30 at a trade at a time and get in and out in a few minutes. Okay, so these are all the strategies we'll teach you in detail over the next few weeks of our binary courses here. We'll walk through each one and dig into them a little deeper than we did tonight, explaining the charts, the strategies, the indicators, entry and exit rules. So join us every Monday night. You can learn these for free. Let's see here. There's a couple other questions here. For scalping, you can do in the money, at the money, or out of the money. We normally do more out of the monies or at the monies for scalping. Because when you take an in the money trade, it doesn't move as quick, but an out of the money trade is lower risk. It'll move quicker, get you that in and out scalp a little quicker. Yes, Rob, this is at 7 p.m. Eastern Time every Monday. Now, so let me answer a couple questions here. Again, if you go to our website, apexinvesting.com, you can sign up for a free member account. We do have some different memberships and trial memberships you can try that'll give you access to some of our trade rooms, some of the indicators and charts that you've seen. But you can sign up for a free account, make a username and password. It'll give you access to the site. You can watch all of our videos, all of our training courses that show how to do all of these. Right here, if you go to the questions tab, and then trading questions forum. Several people said, hey, I came in late to this webinar. Is it being recorded? Yes. Questions, trading questions forum. Under general forum, it might be hidden, so you might have to click show. But right here, Apex webinars, newest webinar. Okay, that's where all of our webinars are initially posted. I'll try to have this on there later tonight or by tomorrow. You can also go back and watch last week's webinar on Binaries 101, explaining all the basics of a binary. And that's where this webinar will be as well. Okay, you can go here to the Education tab and go down to Nadex Tutorials and click Nadex Binaries, and you can watch all kind of videos on Nadex Binaries. We have videos on here about some of the strategies we covered a little while ago. I know I'm giving you a lot of info here. Right here under Binary Essentials tab, it says Trading System Courses. You can watch a step-by-step video course of how we trade the 5-minute binaries with the trend catcher like I just showed you. Right here, the binary strangles, we covered the strangles, and right here, the butterfly. All right, you can watch all those in depth if you'd like, right there. Okay. So yes, Rob, trend catcher for binaries is right there under Binary Essentials, 5-minute binary trend course. Like I said, even as a free member, you can go in and watch that video. There's some trials in here if you want to, try out the system and the indicators and all that. You can as well. Let's see here. The trend catcher itself is not, but you can watch all the videos to learn how to use it, Martin. And then there's a trial. You can try it out for like 2 weeks for like $7. I mean, you can try it out. Yes, we do use NinjaTrader. A couple people are asking about how do I get charts. Right here under questions, Apex investing courses. There's a step-by-step course here, and it's called Setting Up NinjaTrader and Data Feeds. This will show you how to set up NinjaTrader, get live futures and Forex data, and we show you how to get it all for free. Doesn't cost you anything. Okay, just go through that step by step, show you exactly how to get it all for free. Let's see here. Let me just look over some questions here, guys. I know we're running a little over. Woody, you were asking about getting filled. You said I can send you an email later. Not sure exactly what you're meaning there. If you can clarify that a little bit, I'd be happy to try to answer that for you. But one quick key here that it slips up a lot of people, and you actually saw me just do it myself, is what we call chasing orders. All right, everything on Nadex is a limit order. Okay, for example, let's say I want to buy this. I want to buy one, and I want to buy it for $42.50, and I go place my order. But wait, what happened? Now it's down to 33. Now, oh, okay, so let me sell it for 33. Now I'm going to go to play. Oh, now it's at 36. And you find yourself, I can't get my orders filled. I'm chasing it. Every time I place an order, it doesn't actually place it for me because the price moved and the order went into working orders, waiting on the price to hit. Okay, that's what you call chasing orders. Especially on 5-minute binaries, that price can move so fast. All right. So for example, right now it's at 12.50. Okay, well, if I said I want to buy it for 15 or less, boom, I got it filled. You see that? All right, but let's say I just clicked on it at $11 and tried to buy it for $11, and it went up to 13. Well, what I just told the ticket was buy this for 11 or less. Buy it for this or less. So if I tried to buy it at $11, but by the time I went to press enter, it was up at 13. I'm not going to get filled on that order until it goes back down to 11 bucks. Okay, does that make sense? With a limit order, you're getting that or better. So to make sure you're not chasing your orders all over the place, just enter a little higher for a buy or a little lower on a sell, and it will fill you for the best price right there. Okay. Let's see here. What are you saying? Get filled quickly. It seems like I can't get filled and it goes the wrong way. I mean, I lose money. Yeah, and that's part of what I'm talking about, like right there. Like, for example, let's look at this one. Okay, let's say I want to buy this one. And it's right now it's at 24.25. But then by the time I go down here to place the order, see, it's all moving around on me. And I might not get it. And then, then by the time I get out of it, get back in. Okay, but if I know I want to buy that and I just want to get in it now, let's say I put in 40 bucks. So right now it's at 23. But let's say I want to buy this and I put 40 bucks in there. Place order. Boom. I got in the trade. But what price did I get in at? 21. Because when I put 40 in there, it's a limit order. I'm saying that's the max I'll pay for it. But fill me at the best possible price you can right now. Okay? So, because that price is jumping around over here, well, I'm chasing, it moved a few cents. Well, if I just place the order a little higher, boom, I get filled and get in right away. Okay? Same thing if I'm trying to exit an order. When a lot of people say, I can't get filled quickly enough, or I couldn't get out of it, or these 5 minutes are too fast for me. What they normally mean by that is they're chasing their order. All right? They're in this trade, and these prices are jumping around, and they're clicking it. See, if you click this, boom, it'll fill in the price right here, place order. All right? And that one actually happened to work because it went the right way. But sometimes it won't. You just got to place a little higher on a buy or a little lower on a sell to get you right in. Okay? Kyle, that would be, I don't believe so, no, not on an iMac, no. Yes, Gary, we do have help for that. Otherwise, those videos, literally, I made them myself. Those videos, I literally walk you through, go here, click this button, here's what will happen, it will install, click this button next. I made those videos myself for installing Ninja. Very, very easy. But if you have questions, let us know. Let's see here. Okay, guys. I think that's about it. I think I've got most everything covered there. Thank you guys for being on here. I know we went a little long, and I went a little long-winded there, but wanted to give you an overview of all the different strategies available out there. There's still plenty more that we can cover, and we do all the time here at apexinvesting.com. We will be covering all those in detail over the rest of this month and next month. And again, go to our website, apexinvesting.com, and you can go through and watch all those videos as well. And I will get this video uploaded for you by tomorrow. Okay, Dave, thank you as well. Guys, I appreciate it. Thank you, everyone. Have a great night.